The proposed Clarity Act introduces a structural limit stating that no single company may hold more than 20% of the circulating supply of any blockchain asset, a measure designed to prevent centralization, reduce systemic risk, and protect the integrity of digital markets. For XRP, the consequences are enormous. Ripple currently controls around 45 billion XRP, nearly half of the total supply, meaning the company could be required to reduce its holdings to approximately 20 billion XRP if the act becomes law, triggering one of the largest asset redistributions ever seen in the digital asset sector. At the same time, new innovations on the XRP ledger, such as Smart Escrows, are expanding the network's capabilities, creating a moment where regulatory pressure and technical evolution collide to shape XRP's next chapter. This opening analysis sets the stage for understanding how Ripple may comply with the Clarity Act, who the potential institutional buyers of the excess 25 billion XRP could be, and how these structural shifts might influence long-term pricing and liquidity. The Act pushes Ripple toward a more decentralized model, while Smart Escrows introduce programmable, automated financial agreements that enhance XRPL functionality, meaning the network becomes more versatile at the very moment Ripple faces stricter regulatory constraints. These combined forces, policy and technology, will determine how institutions, developers, and long-term investors evaluate XRP in the emerging financial system. Ripple's current position under the Clarity Act. The 20% ownership cap directly challenges Ripple's historical role as XRP's dominant holder. The company has long argued that its escrow system provides stability and predictability, yet the Clarity Act reframes this practice entirely. Under the new requirements, Ripple would need to reduce its total holdings from 45 billion to 20 billion XRP, disclose all controlling parties associated with any escrow accounts, and provide public details about redistribution strategies, timelines, and recipient profiles. This reform aims to remove the possibility of any single entity exerting outsized influence over XRP's supply, liquidity, or governance. This regulatory shift forces Ripple into a more transparent and decentralized operational model. What was once internally managed would now require strict disclosure, documentation, and oversight. For XRP, this marks a turning point. Decentralization will no longer rely on voluntary company decisions. It will be mandated. And ironically, this mandate could strengthen XRP's appeal among institutions that require legal clarity, predictable supply schedules, and reduced concentration risks before integrating a digital asset into high-value settlement flows. Why transparency matters for market confidence. XRP's long-term value is heavily shaped by how Ripple manages its remaining supply. Investors and institutions consistently evaluate escrow unlock schedules, Ripple's historical sell patterns, liquidity hub integrations, and the overall concentration of ownership. Supply uncertainty has always been a key factor in market skepticism, especially among larger financial players who require predictable conditions for adoption. If Ripple releases a transparent, regulated roadmap explaining exactly how it will reduce its holdings from 45 billion to 20 billion XRP, investor confidence could increase dramatically. Markets reward clarity and penalize discretionary or unpredictable token distribution. A fully documented supply strategy, especially under a legal framework, positions XRP as one of the few digital assets with structured, compliance-friendly governance, increasing its appeal for global financial institutions. Smart Escrows explained, simple terms. Smart Escrows on the XRP ledger are an advanced evolution of the traditional escrow model. In simple terms, they act like programmable digital lockboxes for XRP. Tokens can only be released when specific conditions, timelines, events, or multi-signature approvals are met. This transforms XRP into a tool capable of supporting automated contracts, institutional settlements, and decentralized financial structures without requiring intermediaries. The timing is remarkable because just as Ripple faces regulatory restrictions, the XRPL itself becomes far more capable. Smart Escrows enable sophisticated financial workflows such as automated corporate payments, lending structures, advanced custody models, and DeFi-style agreements. The network grows more autonomous and more institution-ready precisely when regulators want Ripple's central role reduced, accelerating XRP's move toward genuine decentralization. Possible price impact if these buyers acquire XRP. If any of these entities, X Money, the US Treasury, BRICS, or BlackRock, acquired the 25 billion XRP, Ripple must redistribute, significant price and liquidity effects would follow. Large institutional buyers reduce the amount of XRP available to retail markets, and long-term accumulation usually places upward pressure on price. If acquired XRP is locked into smart escrows or treasury accounts, market scarcity increases further. Confidence grows as ownership concentration shifts away from Ripple toward distributed global institutions with strategic long-term plans. Across all scenarios, the market would likely interpret institutional acquisition as a powerful endorsement of XRP's role in future global finance. Combined with a predictable supply reduction roadmap from Ripple, this redistribution could create a new price foundation supported by utility rather than speculation. The result is a more stable, more trusted, and more widely adopted digital settlement asset. The Clarity Act marks a defining moment for Ripple, XRP, and the global blockchain sector. By enforcing a maximum ownership threshold of 20%, the Act removes the possibility of centralized dominance and pushes digital ecosystems toward greater decentralization. Ripple's obligation to reduce its holdings from 45 billion to roughly 20 billion XRP forces transparency, structured redistribution, and new institutional collaboration. Whether major buyers include X Money, the US Treasury, BRICS, or BlackRock, the redistribution of escrow XRP has the potential to reshape market dynamics and restore long-term confidence in XRP's trajectory. The Clarity Act does more than regulate. It accelerates decentralization and ensures that no single company, including Ripple, can ever again control the majority of a blockchain supply. This transformation positions XRP for a more stable, credible, and institution-ready future.